Hi everyone, welcome to the Timing Research Show for November 23rd, 2015. My name is David Kosmeter. I'm the creator of Timing Research, and today we are going to be talking about the 113th weekly report from Timing Research. So if you haven't had a chance to take a look at this yet, just go to TimingResearch.com/reports, and you can download this or any past reports there. So I have Jonathan Rose hosting for me again today. So I'm going to go ahead and turn it over to him.
Great. Thank you, David. My name is Jonathan Rose. I'm the owner of ActiveDayTrader.com. Got a great panel for you today. We have Dan Nyaradi from TradingGods.net, Rob Hanna from Quantifiable Edges, Jim Kenney from Option Professor, and Michael Filighera. Michael, sorry, I might have pronounced that incorrectly. But first, we're going to start with Dan, and if we just go around, if everybody could introduce themselves, tell us a little bit about your site, and we'll go from there.
Right on. It's good to be here. Happy Thanksgiving to everyone. And we're blessed to live in a country where we can make as much money as we can, especially after watching these shows. So that's awesome. My name is Dan Nyaradi. I'm with TradingGods.net. Formerly used to be WallStreetSectorSelector.com, if any of you recognize that. We have recently switched over to a new website and a new brand, TradingGods.net. We've focused specifically on VIX trading and the VIX index and trading VIX ETFs and VIX options contracts. And happy to be here. Thank you guys for having me on the show.
Great. Thank you. Thanks, Dan. Let's go to Rob with Quantifiable Edges.
Thanks. Yeah, I run Quantifiable Edges, which is a quant-based site, website, and newsletter. I've been doing that since about 2008. I also am one of the co-founders of a site called InvestaQuant, and InvestaQuant's been around for about a year now, and it has day trading, overnight trading, and swing trading now. Swing trading has become a part of it in the last couple of months. So that's I'll talk more about that when we're going through some of the my analysis.
Great, thanks. Okay, and let's go to Jim with Option Professor.
Yeah, I'm Jim Kenney, and I provide the content for the Option Professor. Option Professor is an educational firm that explains the uses and the risks of option trading and all the different strategies that are out there so that investors understand the upside and the downside of the different strategies that are available to them so they have a better idea of what might be right for them and what might not be.
Great, thank you. Thanks, Jim. And let's go over to Michael with Logical Signals.
And good morning or good afternoon, depending on where you are in the country. I am Michael Filighera. I am with Logical Signals. It's my website. And basically what we do there is the website got started because many people were asking. I published analysis in the past, and many people started coming back saying that hey, what's going on? Can you come in? Can you help? Can you do this? So I started Logical Signals. Started to write again, and then I also started a trade room. And so we have a trade room, which is the Logical Signals trade room, and it's not an open trade room. It's basically closed. We are currently, I am considering or looking to take 4 more traders who may be wanting to come in. We focus on futures within the trade room. I also will work with people on trading options. I tend to stick towards the futures at the moment because we've slipped more into a day trading mode versus a position trading mode. Although Dan may convince me otherwise today because I really like the VIX and I like volatility very, very much. But right now we are looking for 4 additional traders that may want to come in and use our algorithms. I use a couple of proprietary algorithms and combined with some other traders. And right now we're busy in crude, the S&P, the Dow, and the NASDAQ. Primarily we trade the euro and some other products, gold, when it's there.
Great. Thank you, Michael. And again, my name is Jonathan Rose. I'm the owner of ActiveDayTrader.com. I've been a professional trader for 18 years, and the last 4 years as an options market maker on the CBOE. So for my trading, I concentrate a lot on options, a lot on relative value type trades. We do a lot of pair trades, closed-end fund arbitrage, and then all option strategies across the board, really just looking for the goal of return on capital. So let's move on to the first couple of questions. So let's start with Dan. And so Dan, based on any technical or fundamental indicators you want to use, would you predict that the S&P 500 index will move higher or lower at the end of this holiday week? And then after, if you can throw in your percentage of confidence with that call.
Sure. I think this week, excuse me. I think this week we're looking at a negative week, more or less based on the fact that it's a holiday week and not as many people are going to be trading. That being said, the S&P 500 has again petered out. We've seen a small little rally here in the last 2 weeks, and of course a very large rally in the last, well, more or less 6 weeks. So I think, again, the market is just kind of looking where to go next, and nobody really knows. That being said, when we take a look at the VIX index, which for those of you who are new to the VIX index, the VIX focuses on, it's the fear index, so it's pretty much the inverse of whatever regular equities are doing. Whenever investors are confident, then VIX index typically goes down. Whenever investors are fearful, the index typically spikes. The VIX right now is going down, which would indicate confident traders. That being said, I still believe we're going to be in a down market this week, just based on the fact that not many people are going to be trading, and it's going to be people are going to be checked out. And I would put my probability of that at around 80%.
80%. Okay, fantastic. Thanks, Dan. And Rob, same question to you.
Okay. Thank you. If it's all right, I'll try and screen share here.
Yeah.
All right. Oops. All right. So I use a few different tools. This is one of the tools we have at InvestiQuant, and this just is kind of a overview of what the different indices are showing from the perspective of what our observations are for the next 1 to 5 days.
Rob, we're not seeing your screen there.
Oh, you're not.
Are you pressing that the green screen on the on the left of your screen? If you just hover over.
Okay, hang on. Let me find my way back to the Hangout. Yep. And then
okay, so Rob, why don't we come back to you?
all right. Is it working now?
Yeah, that's working now. Well,
okay.
Now it's off.
I'm sorry. All right, I'll give you an overview without the screen share. Basically, we look at a number of different indicators at InvestiQuant. So we have 3 types of indicators we'll look at. One are acceleration indicators. They basically look at how fast the market is moving and where is it moving from. And acceleration right now is moderately positive, looking out over the next 1 to 5 days. Momentum is the second indicator, and that is right now moderately negative. Momentum basically looks at the persistency of whatever move is happening. So are we chopping sideways? Are we trending higher? Are we trending lower? And that also looks at it on both a long and short-term basis to determine what's likely to happen in the next 1, 3, and 5 days out. Seasonality is the third thing we look at, and seasonality is quite strong right now. And I'm seeing that not only based on our seasonality systems, which look at things like day of week and certain holidays, but they'll also look at time of the month, time of the year, long-term cycles. There's 3 completely different looks at seasonality, all looking at different short-term time frames as well. And that's looking fairly positive right now. Additionally, I've done some research that you can see on the Quantifiable Edge's blog right now. It's just quantifiableedge.com/blog, and you'll see that it's looking at Thanksgiving week. And Thanksgiving week has been a very bullish week historically, primarily on Wednesday and Friday. Wednesday and Friday have closed up a large percentage of the time over the last 55 years, and gains have been quite strong. And then the last thing I'm looking at is the action in the VIX, actually, like Dan. We have seen the VIX go from an extreme high, meaning a stretch above its 10-day moving average, to a sharp drop where now it's stretched below its 10-day moving average. And when we've seen a move from 10% or more above its 10-day moving average to 10% or more below its 10-day moving average within a 4-day period in the past, that's only happened 22 times since 1992. And if you look out 4 days later, 17 times it's been higher. And gains have been pretty strong. And basically the condition that this normally happens in is when you're in a long-term uptrend and you get a sharp pullback due to a scare, and then that scare wears off and you see it moving forward. Now, I think part of the reason the VIX is dropping coming into this week also is the fact that it's a holiday week and trading is going to be light, and so a lot of times option players don't believe that there's going to be a whole lot of volatility in the market. There typically isn't on these low volume weeks, so that'll cause the VIX to drop a little bit also. So that may be part of it, but still that study suggests that we'll have a higher market ahead of us in the next few days.
And a confidence level with that?
I'd say about 80%.
80% as well. Okay, great. Thanks, Rob. And let's go over to Jim.
Okay, again, with Option Professor, they don't actually come out and make any recommendations. They're strictly an education firm. But just to give an opinion on things right now, let me do that. And again, obviously some things we're all talking about may be factored into the market. You've got to remember that at all times. I concur that the next 20 days historically has been pretty bullish. Having said that, last December we had a 5% drop or so after having a strong November and October rally. So right now the market seems to be languishing, and it would say to me that there's possibility that we could drift lower, but as long as it's above on the S&P 2065 and 2000, you know, the risk still is that they may try to get up to that high of 2110 and 2135. The other key here this week is as we go into Black Friday, you know, GameStop announced their earnings a little weaker this week, this last report, and some people are concerned about Black Friday not getting off to the greatest start, and GameStop was down about 10% today and about 28% in the last 10 days. And also Amazon, another big key. How much business are they going to take away from the other retailers? And if it's going to be a lot, then obviously Black Friday could be a wild time for the markets. So, you know, right now, as far as the very, very short term, which is obviously difficult and just a guess, it looks to me like the overall market is positive. And if it doesn't get a surprise on the downside, drifting higher and trying to get towards those highs may be what the market will try to do. But again, you're always going to be susceptible for that because the liquidity seems to be kind of lousy in the last few months. You know, one bad report, one guy says things didn't go well on Friday, and you know you could go into a vacuum pretty fast. But the way it's set up now, the way they've gotten it above all the moving averages, drifting higher, looks like it would be the path of least resistance now. So, and I would put something like 60% on that.
Okay, so we got 2 bullish and 1 bearish, and let's go over to Michael.
We're only talking about this week. And I
only
think
this week.
That's kind of a key factor. And I'm a very strong probabilities guy. And so when I checked things out, I felt very strongly, and I'm going to give a nod to the timing research probabilities or statistical equation that David works out. and agree with it. I believe that the market, the S&P, will be lower on the week. And I also look at the VIX and believe that the VIX is also due for a little bit of a pop. So I got one that's way oversold, and I got the other that's kind of pretty overbought, and I think they just even themselves out. Not to say that the following week does not then pick up again and we move into the quote-unquote Santa rally or that end-of-year rally where we see a lot of, just position squaring and people getting out ahead of bonuses or just ahead of year-end. But I believe this week that the S&P will end down, and I will also give that a 75%.
Okay, that's 3 down, 1 up, and then I will, for myself, it's kind of interesting to me. I always love seeing this where I'm going to share my screen here. I'm just using TOS, and this is SPX on a weekly. The last 2 weeks, same high, same low. So last week, high 2097, low 2019. The week before that, was it high 2096 half. And then today's high, 2095, 2096. So I actually think the market overall, it's kind of strong. It's hanging up there, just hanging out by these highs. But I think we're at a crucial number right here for the week. I'm another believer that, not a believer, just in my course of trading, Thanksgiving is notoriously the absolute worst week to trade. I think that, especially being more of an options trader and a relative value trader, a lot of those relationships just kind of break down because of liquidity concerns. So I think, for me personally, I pretty much take the week off as far as trading. I think from a risk-reward perspective, in my style, it's not really a good do. But overall, I think volatility is going to be lower, and SPX maybe creeps higher. If it gets above that 2096, 2097, which is right here. If not, if we don't get through there today, I'm going to say I'm going to go bearish. But overall, without throwing too many answers up there, I'll say bullish with 55% confidence rate. So let me kick off my screen share, if I know how to do that. There we go. Okay, so now we're going to move on, and let's go on back to question 1, and we'll go to Dan. And so, Dan, what developing events, fundamental or technical, are you looking at for the week?
He's muted.
Dan, looks like you're muted.
Dan, mute.
No.
Hey, Dan.
Okay, can you guys hear me now?
Perfect.
All right. Last week and the week before we saw a significant rally, and again, I don't think that's going to continue this week. I think just due to lack of liquidity solely, we're looking at a down week this week. That being said, we have a huge amount of economic reports coming out on this Wednesday, so the jobs report, personal income, consumer spending, consumer sentiment. All these reports might shed light on how the market is feeling on Wednesday. That being said, I feel like most people are checked out and will hopefully be enjoying their Thanksgiving dinners on Thursday. And then going back to just the VIX, I always look at the VIX as a measure of how investors are feeling. Yes, investors are feeling more confident this week because the VIX index is going down. If this was a normal week, I would probably be more on the bullish side of the coin this week. But since the VIX isn't, you can never really find the holy grail of trading. There's not one system that works 100% of the time. That's why risk management is important. So, as long as Thanksgiving falls this Thursday, I think we're looking at a down market.
All right, Dan. Thank you. Let's go over to Rob. Rob, same question.
It's funny. Same indicators, opposite opinion. So that's what makes markets, right? I mean, that's why we got buyers and sellers. I'm not really looking for anything fundamental this week. Like the other guys have noted, it should be a pretty quiet week with markets. I just checked my study on Thanksgiving week. If you had bought at the close on Tuesday of this week, so Monday and Tuesday haven't been very bullish or bearish. They've been pretty neutral over the years. But if you bought the S&P starting in 1960 on Tuesday and, at the close and sold Friday's close, it would have closed up 83% of the time. 46 times you would have had a winning trade, 9 losers. The average gain between Tuesday and Friday has been 0.6%. So between that and the fact that I'm not seeing any short-term bearish indicators, everything else is kind of leaning short-term bullish. That's why I'm heading with the long, and I don't have a whole lot to look at this week other than new things that might come up.
Right. Okay, let's go over to Jim.
Well, as far as the short term this week, we have the news coming out that was already mentioned. Some of those news events could move things. The other thing that happened here today that they announced was a pretty big merger with Pfizer and Allergan, which is adding to this really parabolic move on mergers and acquisitions, where we're into the probably $2 trillion or better in mergers and acquisitions this year alone. So the thing here is that the news right now with that type of a report, you would consider that a rather positive, people committing that much money to get together, and then maybe offset a little bit by the GameStop information. So this is pretty much in a range. We have 2110 October's high, and we've got the 200-day moving average at 2065, something like that. So you're kind of in this window here, and I think it'll be interesting to see if some kind of news this week would bust that window. Otherwise, if it stays, sanguine, you could just basically stay in this window here this week. But some more news hitting the market on some company or some acquisition, where somebody announcing something didn't go well or went well, could really get us going a little bit. Because as we were talking about liquidity, if a lot of people come in and start selling, bam, there goes the bids way down. And of course, if there's a squeeze on the people that are shorting, boom, there you go. So right now you're in the middle here, and it's very difficult to make any real big comments on which way it's going to break until news and prices, start getting it up, and that VIX that we're talking about, which can go anywhere, obviously, starts moving one way or the other.
Okay, great, Jim. Seems like a lot of parallel thoughts. I'm definitely on the camp of agreeing with you as well. Just a quiet Thanksgiving trade. Let's go to Michael.
Things that I think could affect the markets this week are, again, like everybody's already said, it is a holiday week. I think we have a lot of big traders, or the primary traders, maybe came in today, kind of square things off, because we did see some nice activity first thing out of the gate this morning, and then it kind of just drops off. So it gets left to maybe their assistant or their clerk or whatever. And I think that can really have an effect as things go on. And they're heading out, whether they're going for skiing, whether they're just going for extended week with the family, whatever the case may be. I think that does have a big play. And when the markets are thin, in either direction, you can have a very large play. But I think what we've got hanging out there still overhead is all of the events that are happening in Europe right now. Everything that is happening internationally on the geopolitical level, I think will have an effect. But I think that effect is going to get translated back down via movement in the dollar. And I also think that you're going to get a lot of traders that are going to start to prep for their anticipated or not anticipated move in interest rates come December. And so, as we've all spoken, Wednesday there's a lot of economic figures that come out that may tilt that view one way or the other, and it could really start an avalanche in either direction. So I think that that's what I'm going to kind of be looking at. But like you said earlier, Dan, that you get into a point where, do I really want to go in and trade? I don't know. I think that I keep things really tight on days like today, and I shorten my profit targets and take care of risk, and I'm just not willing to put it out there because there is a lack of direction. So, but I think those two factors, the dollar, interest rates coming up, and all of the geopolitical things that are happening outside of the United States that really do affect us, can have a bigger effect this week.
Right. Great. Thank you, Michael. I think you make a really good point, and I actually, and I said this earlier, I really don't trade Thanksgiving week, and the reason why I don't trade, is right along with what Michael is saying, is because I don't expect very much out of the market. My winning trades, I'll find that I'll lock in profits real quickly. So I'm actually changing my trading style, and because of that, that's the reason why I'm really not trading, because I never really want to trade my trading style just based on a holiday-driven week. So normally I'll let winners go. I'll get out of my bad stuff real quickly. But on a week like this, that I don't have a lot of confidence in the overall move, I end up covering my winners way too quickly. So that's something that I've learned about my own personal style, that I'm better off just waiting, and especially being more focused on the options. More times than not, buying options, I'm going to get better prices next Monday than I will this Monday, and I won't have to deal with the theta of carrying them throughout the week. So that's more of, back to why I like to sit this week out. Good week for studying, great week for family, decent week for football as well. We're going to press on with a new question, which I love to see this. Question number 4. Options trading volume has increased dramatically in the last 15 years. Do you trade options? Why or why not? And before we start, loved all the answers. I was kind of surprised by the percentage of people that really are trading options now. I don't know if this is changed drastically over the last 5 years, but from the respondents, it looks close to 80% of the people are dabbling in options in some way. So I think it's really great to see. So let's go and start with Dan over with TradingGuide.net.
Sure. Yes, we absolutely do trade options. In fact, as a part of our VIX trading product, one cornerstone of that product is trading VIX ETF options contracts. And without going into the VIX and why we think the VIX is so awesome, we trade options because of the leverage. Essentially, and that has the positive and negative side to it, beauty and the beast. And the leverage can really make or break your day. It can completely ruin you in one day if you don't have accurate risk management, or you can become, well, in some cases, a millionaire in one day. All jokes aside, it can be very risky. So risk management is very important when you're dealing with options contracts, just because we've had people write in horror stories to us about past option programs they've tried and they've lost their entire 401k over a week because they didn't have the proper risk management techniques in place. That being said, VIX Trader, our VIX product that trades VIX ETF options contracts, we do quite well. And it's because of proper risk management techniques. So I do think options contracts have a place in every person's portfolio, but they are very risky and very volatile instruments, so you have to be careful with trading. But yeah, I think on why options have become more popular over the last, particularly 5 years, in my opinion, and certainly in the last decade, I would imagine it's likely because of the recession and because of low interest rates on the treasuries. People are looking for a way to get ahead, and I think it's harder and harder these days to get ahead on just your typical equities trade, which is why options contracts appear more favorable to investors. But that being said, we've had a lot of people that we have encountered in this business over the last 5 years who have completely lost everything because of options contracts. And then we've met a lot of people who have made a sizable fortune off of them. So I think as long as you have proper risk management techniques, they can hold a very important place in your portfolio.
Dan, I know you guys concentrate a lot on the VIX. How many different products do you use to trade the VIX, or what different VIX products do you use?
Well, we focus exclusively on VIX ETNs and ETFs. An ETN or an ETF, they're they're pretty much interchangeable. But and so we, for example, if we're doing an options contract on a VIX ETF, we would use VXX or XIV. VXX is just the ETF that tracks the index, and then XIV, of course, tracks inversely. But our product focuses on when and at what level and what sort of stop losses to have and that sort of thing on when to buy these products, whether you're doing it with the options contracts or the ETFs.
Great, good stuff. Thank you. Let's go over to Rob with quantifiable edges.
Can you hear me?
Yes, loud and clear.
Sorry about that. I trade options on a more limited basis. So I do an awful lot of work trying to determine the direction of the market, and normally I like to make directional plays, and I'll do that with either ETFs or stocks or futures. Options, there is a lot more that goes into the price of an option than just the direction of the market or even the direction of the security that you're got the option on. That said, I do use options sometimes for leverage. I'll go deep in the money options when I'm looking for a lot of leverage. I'll also use options sometimes as part of my risk management. So I don't like using stops with several of my strategies, and if I want to protect against a big move against me, I'll use options. They are the ultimate stop. They work as a stop every time. You're not going to get blown through. It'll go to zero, right? So you lose it all, but you lose the small amount you put into the option rather than the large amount you might have put into Bear Stearns stock.
You're talking about buying some puts for protection.
Yeah, yeah, or buying calls instead of buying the stock. And if the calls go to zero, well, that's a lot better than the stock going to zero because I'm not putting down nearly as much on the calls as I would on the stock. So that's generally why I buy options.
Great. Okay, Rob, thank you. Let's go over to Jim. Jim, it sounds like you do trade options with Options Professor.
Well, no, actually, Option Professor doesn't do any trading of the options, but we do educate you on the uses and risks of all the strategies that we put on the DVDs. And so for the person who's looking for education, they're going to get an explanation on doing different strategies like buying the option or buying the call, buying the put, or using it as a hedge, as we just were talking about there, using it as some hedge or portfolio protection, and strategies like collars or married puts or whatever you'd like to talk about. This is why Option Professor is in business, for the education of the use and the risk of all the strategies that people might want to take a look at, or at least a lot of the strategies. And spreads where you buy one option, sell another, and then calendar spreads and ratio spreads, and those condor strategies where you're doing spreads on two sides of the market. So obviously there's a lot to learn, and Option Professor, the role is not to do trading. The role Option Professor has is to make sure people understand the use and the risk and the menu of choices out there.
Great,
which is important, I think.
Absolutely.
Yeah.
Let's go over to Michael with Logical Signals.
I definitely trade options. I am an ex-options market maker. I was here on the Pacific. I've traded on the London traded options market, and I've traded in Amsterdam, and I've also traded in Germany, all options-based. And what I've learned since all the floors basically have closed and kind of come off is that you had to pick up some different styles of how you wanted to trade those options. And Jonathan, actually, just being on the program with you a couple of times has really brought a lot of that to the forefront, which I think is great. And I think, Jim, what you're doing is also something that's very important, because I believe people really do need to understand what they're getting into. Having said that, I tend to, I like to take advantage of volatility, and so I'm also a theta player. But I don't like to pay, so I like to receive. And so, therefore, I'm always looking on positions if I'm going to try to take advantage of volatility in the individual options or in the underlying. Then I use positions like, which have already been mentioned, Iron Condor. Can use calendar spreads if the vol is really too low. But high vol, I like verticals. I like Iron Condors. I think that one thing is I'm glad that more and more people are coming in and choosing options to trade. I would just highly recommend that they get in touch with people that actually can teach them, that actually can show them, because too many people come in and they buy an option and they've not really done their homework. So part of what I've done is go look at statistically, when is the best time to take off a spread? When's the best time to take off even a call or a put? Many people say, well, you buy it and you let it go to expiration, or you let it, go to zero. Where maybe they put it on, they got the move, but they still lost money because they don't understand that they're playing against volatility. So I think that there's a lot of education that needs to be really turned into producing better option traders. But having said that, that kind of could put a crimp in your style of trading, Jonathan. Because I know that you look for a lot of the inaccuracies in the market, and that's really the role of a market maker. It's such a great thing to do, and it's a surefire way of just kind of locking in your profit before you start. So, but option trading, love it. I love it, and I do use it.
Great, thank you. Yeah, I use options quite a bit as well. I think the role of the market maker has changed too over the years, especially now considering how much automated market making has taken its toll in the options world, where it was heavily involved with the equities, and now it's really taken over the options world as well. So I find that after like the top 50 names, especially when you get to the smaller names, a lot of these are priced just inefficiently. Their market makers are tight, too tight, and I think that in the past the markets were much wider, much more favorable to the professional, but now things have changed so much where I was trading a small stock, MOMO, a pretty illiquid stock, and they had some little options that were 8-cent bid at 9 cents. And that's just something, and Mike would probably agree, as a professional market maker, we would never be 8 cents bid at 9 cents. But now that automated market making has really taken its hold, you see a lot more of markets like that, and those, I think, for the retail trader are to be taken advantage of, because I think a lot of them are wrong. Now, I'm gonna go to my screen and share something. One page on a PowerPoint, and this is the most widely asked question that I get from my community, so that's why I just put this together. So 3 different places to look. So just look at the first area. Last trade 13, this is just a phony baloney stock. Calls are in green and puts are in red. So if you buy the 14 calls, you can think of that as you're just buying stock at 14. Why would you buy stock at 14 when the stock's trading at 13? It's because you get massive leverage to do that. And what people don't realize in managing an options position, if that stock goes to 15, if you wanted to lower your risk, you don't have to do this, but it's just another way to get out of your position. You could just sell 1,000 of the underlying at 15. Because being long a 10 lot, you're long 1,000 shares. That will just allow you to cover your position or take out that upside exposure. And now, if that stock goes right back down, you could buy the stock back, and then your 14s would end up worthless. So you don't just have to. My point is, when you have an option, if the stock's at 13 here and you buy the 14 calls, you don't have to just cross your fingers and sit on your hands and hopefully that trade becomes in the money. Okay? Because a professional is going to look at that and say, if the stock goes to 14, then to 12, 14 to 12, that's an excellent, excellent trade. And that's what we try to do, is we try to teach the retail community how to take advantage of moves like that, and also to give you more escape routes. Because I think, I'll go back to my screen here, but I think the advantage that I have with my clientele is that I have a lot more ways to manage the trade than they do. And I think that's a really important use of options, that you can find. You can get very creative with how you cover a trade, rolling it into another kind of trade, whether you want to sell some upside calls and roll it into a spread. You don't just have to sit there with your one options position. You could manage it, and I think that's the real benefit for options, that it gives you lots of options. So that goes through all of our questions. Why don't we go through one last time and start with Dan, just kind of final thoughts that you had? Go ahead, Dan. Dan, you're mute. Dan, can you hear me? You're on mute.
Looks like you might be frozen now or something. Maybe come back to him in a minute.
Okay. Let's go over to Rob, and then Dan, we're going to come back to you. Your sound's not working. Go ahead,
Hi,
Rob.
Jonathan. Thank you. It's been great being on the show with you. David as well. So thanks for having me on again. I always enjoy coming on the show. I'd ask people to check out InvestaQuant.com, QuantifiableEdges.com. InvestaQuant, we actually have a coupon for the our Swing Edges subscription. If anyone wanted to check that out, just type in Timing Research, and you get $100 off the first year. Which is, I think it's $400 normally for a year, so it'd be for about $300 with $100 off coupon. Or you can go to InvestaQuant.com/timing research, and you'll see an opportunity to get some other information there, as well as that coupon. Quantifiable Edges, check out. We've got free subscription to our newsletter anytime as well.
Great, thanks, Rob. Dan, let's go back to you.
Yeah, we're still not able to hear you, Dan.
Sounds like Dan said thank you. He gave a wave. He's having some microphone issues.
Oh, okay.
Jim, let's go over to Jim.
Okay, just a couple things as we go at the end of the year here and going to 2016. You know, in addition to the weekly information that people look at when they're doing extremely short-term trading, the macro picture is something to keep a little bit of an eye on. We got the election. We've got China easing, and possibly they did some devaluing. Strong U.S. dollar with the multinational companies, the levels of debt out there. I think I was reading 26 trillion government bonds are under 1%, 6 trillion are under 0. And you know, these levels of debt and the changing picture at the Fed versus the rest of the world, who seems to still be on the easing mode, be very interesting to see. You know, are we going to take out this 2135 and go up towards 2200, or if there's going to be you know, some progress on the upside and then some type of a black swan event in this election year coming up. So it's going to be a I think, very exciting 2016. I think the volatility we saw in August and September may turn out to be seen more volatile moves. I don't know as much as that, but you know, I don't know that that was such an anomaly as people are dismissing it. So we'll have to see, and that's where Option Professor would come in, because again, we're not doing trading ideas with the Option Professor. I'm the content provider, and the idea is to get you, the trader out there, familiar, with all the different call and put strategies and all the different uses and risks of these things, and all the spreads and straddles and strangles and all the different ways to approach it. And then, of course, how the options are priced with the implied volatility and intrinsic values and all the different things that can affect it. There's obviously a lot of moving parts in options, and the Option Professor has always been an education firm trying to make sure the consumer understands as much about options as they can going into it. So having said that, we do have, Option Professor has a free DVD. So to get started, everyone's here today is eligible for that. So just let Option Professor know that you're interested in getting that, and that would be at least the initial way to get started on your education with Option Professor.
Great, Jim. Thank you. And then let's go over to Michael.
Okay. First of all, thanks again. Thank you, Jonathan, for hosting today, and thanks, David, for thinking of me to come in again. I always enjoy being a part of the panel. At Logical Signals right now, as I stated, that the main focus that we have right now is, of course, the trade room. And within the trade room, the difference between us and many other trade rooms is that we actually trade. And we are using real money, and we are trading. And that's the focus. It's the primary focus. It isn't on, what we call chit-chat or just a lot of talking. We're very, very focused, and that's why I tend to keep the group small, because I operate on an open mic basis, so everybody that comes in, they mute themselves. It's not me muting anybody, or I'm the only one that's talking. And another aspect that we focus on, or that I focus on with the group very strongly, is the psychological or the emotional or the personal side of trading. There are so many different technical pictures that can be delivered to somebody that they have trouble, either picking and choosing, or they find that they still have roadblocks that they're unable to kind of overcome to become consistently profitable, or just to return to being consistently profitable. So I work with people on those issues that come up as traders that we run into, and which is another reason why I tend to keep the room small. We share our strategies. People that come into the trade room, new members, I usually do an interview first. I talk about how they trade, what they think their problems are, whether I think they're going to be a good fit for the trade room, et cetera, et cetera. But like I said, I'm looking for probably 4 to 5 additional people that may want to choose to come in and trade with us. Again, focus is we trade, and we use algorithms, and we share strategy, and I like to say what we tend to do is by being in somewhat of a trade room that's open like that, we each hold each other accountable. So for our trades, for our strategy, for what we're attempting to do, and so that kind of just helps the whole learning curve and helps people to move forward. But if anybody is interested, please check out my website, which is www.logicalsignals.com, and then in there's a tab for the trade room. Feel free to check it out. Send me an email, send me any questions, and we'll take it from there.
Great, Michael. Thank you. And Dan, you want to
Let's
go
see.
back to you?
Can you guys hear me now?
Loud and clear.
Yes.
Oh, awesome. My internet connection's a little shaky, and I might need to get a new computer on Black Friday. Anyways, thank you for having me on the show today. I'm just looking, this Wednesday we're going to have a lot of economic reports coming out. Moving forward into December, of course, historically we have the Santa Claus rally, and the stock market usually performs quite well moving into the new year. And I'm also going to be looking at the Fed, what the Fed will decide to do with interest rates, if anything. I'm not sure the Fed is ready to move yet, even though it's been almost 10 years. But so I think that'll lead to an exciting 2016. And lastly, just take a moment this week to be thankful for our health and our families and the fact that we live in a country where we can talk about this and we can make money with the stock market. And that's why I think we all do what we do. I appreciate your time, and thanks for being patient with my technical difficulties. You all have a great week.
Thanks, Dan. Well said. And for me, again, Jonathan Rose, ActiveDayTrader.com. David, thank you for inviting me to host. Had a blast today. I like that we got some options content and options discussion on there. You know, for ActiveDayTrader.com, you're more than welcome to check out. We're running a promotion for a $7 30-day trial membership. With that, you get videos every day, and you'll get our Sunday week ahead video, which is all actionable trade ideas, trades that I'm watching for the week, and that if they present, I'll be putting on in my own portfolio as long as they match with the overall risk profile of my portfolio. We really try to talk about having exposure to the upside, to the downside, long volatility, short volatility, overall portfolio management, bringing that into how we're trading. So again, thank you. Had a blast, and we'll shoot it over to David.
All right. Thanks, guys. Just want to remind everyone to go to TimingResearch.com/reports to download this week's report or any past reports. There's always a little bit of information in the reports that aren't that we don't get to on the show, so you'll want to check out those each week. Also, remember to go to TimingResearch.com/current survey next weekend to fill out the next survey, which generates the data for the next report. And I just want to thank all my guests again. Dan Nyaradi of TradingGods.net, Rob Hanna of Investaquant.com, Jim Kenney of OptionProfessor.com, Michael Filighera of LogicalSignals.com, and of course Jonathan Rose of ActiveDayTrader.com. Thank you for hosting again.
Thank you.
All right. Thanks, guys.
All right. Fantastic. Bye.
Thanks, everyone. Bye.